For the Street, I'm Jill Malandrino. Let's take a look at the trading week ahead, and we are coming into the thick of earnings. As we can see, there's hundreds of companies due to report. Key economic data include housing and manufacturing. The new and existing home sales is really what traders are going to be focused on. And again, it's going to be all about macro headlines and commodity weakness. And Mike, it's been a pretty choppy market over the past few weeks, and now it's just on that uptrend.
Yeah, I think what everybody is looking for now is confirmation that valuations in equities in the U.S., which are, at levels where you begin to wonder a little bit, right? So, if we figure 16.5, 17 times next 12-month earnings is fair value for the S&P, we're at or slightly above those levels now. Basically, it really is show me time during earnings. So now that we've sort of put a lot of those macro concerns and even political concerns, like coming up with a resolution for Iran, that hasn't necessarily been ratified, but we probably expect that. I think Obama's made a decent case for it. Really what we need to see is our earnings confirming the current valuations for equities.
And I think it's a welcome change for traders as well, because it's been really tough to trade around what's happening in Greece, the Chinese market. Then we had some tech glitches on the New York Stock Exchange and WallStreetJournal.com. So I think to move away from those macro headlines and really focus on the fundamentals and the charts is certainly a welcome change for a lot of traders. Even though there's hundreds of companies reporting, we're going to focus on 6 that we have in the Action Alerts Plus portfolio next week. First one, Morgan Stanley, and the big banks have been reporting quite well.
Yeah, the one that surprised me maybe more than others was the one that I actually thought was probably going to be weakest, which was Bank of America. But, as you look ahead, Morgan Stanley is really well positioned. Let's think about this. As you look at the investment banks, they're the ones that really made the largest commitment to wealth management. And in addition to people just having a lot of money to invest in the markets, as the market rallies and they get paid as a percentage of fees, that means that their assets are growing even if they don't add another new client, and even if their existing clients don't add another dollar. So as the market rallies, they're going to do well. So Morgan Stanley, as I look at it, is one of the businesses that's probably the most stable in their sector. They're not going to have the same kind of levels of volatility. Still, they're exposed to trading and things like that, like Goldman Sachs is, but it's not the same level of volatility in their earnings stream. They're very well positioned, I think. And
moving along to Tuesday after the close, Apple. Everyone was focused on Netflix this week, and it's going to be Apple for next week. And I think a lot of eyes are going to be what's happening with the iWatch.
Yeah, I think that it's very hard for iWatch to move the needle for them. This is ultimately a mobile phone company. That's basically the way their revenues shake out. Although they've been making great strides in things like this. Their laptop and desktop computer business have obviously been stealing market share in the PC area, which has normally just been getting crushed. iWatch is really going to be the first wearable technology that could actually signal that there is something here. It'll be very interesting to see how that plays out. I noticed you're not wearing one, though.
Well, Rolex, iWatch, and I'm a little bit old school there, what can I say? But going into that, we just closed out the short strangle that we had on. Would you look to get into an earnings position going into the print with Apple?
Actually, no, I don't think so. Because this is one of those situations where I just like everybody else, I need to see how this plays out. I'm not willing to take that kind of short premium bet. If I was going to do anything against my long position, I might consider selling some upside calls. But I don't want to just be willing to take on more stock without knowing first what they're going to have to say. And we have an opportunity to do it. We have an underlying position in Action Alerts Plus portfolio. Stick with that. If you want, you could look to sell some upside calls. So probably be better bid as a result. But I'm not interested in being short puts into this event.
Moving along to Wednesday, Thermo Fisher. We don't talk about that one this much, but it's been quietly performing.
Yeah, I think this is another look. I mean, there's a couple sectors which seem to be, one of the safe havens, I think, in the marketplace, and I think they occupy it. This is a situation where we might indeed take a look and see whether there's a good position to put on ahead of it. I think one could consider the 140, 145 call spread going into this event, because that's less than a quarter of the distance between the strike price at about $1.20, $1.30 for a $5 call spread going into the event. Might be a good way to take a look at it.
Thursday's going to be a busy day for us. We have 3 companies reporting and a bunch of big ones in the S&P. GM.
So GM has just been getting punished. I think it hit another new low today, but I will point out, and I think people should be aware of this, some institutional options market participants seem to be taking a longer-term bullish view on GM. We saw purchases of the 32 and 35 strike calls going out to January of 2016 and beyond. So I think this is one of those situations, probably a stock substitution trade that we're seeing, but it traded in good size, probably 3 times the average daily volume today. That might be the way to take a bullish stance in General Motors. Just go out and buy longer dated calls here, because obviously technically the stock's having a lot of trouble. Moving along to Dow, we closed that position out early in front of earnings, and that's been performing well too. Yeah, I think this is another situation where I might be looking to. I don't expect a whole lot out of earnings. We're probably 3.5%, 4.5% moves into earnings. For names like this is probably common. This might be a good place to take a look at doing a covered call.
And finally, let's wrap it up with M.
So this is a company that I've really admired for a long, long time, probably as long as I've been in the business, and they just chug along and continue to do it. But right now, valuations are at a level where it's not as exciting to me, I have to say. So of all of the names that we're in, this is one of the ones I would never short long term. I believe that this is going to be a 3 to 5% grower over the course of the next decade on an annualized basis, just like it has for the last 2 decades. But valuation is fully valued, I think, for M.
Thanks very much, Mike.
Sure thing.
For TheStreet in New York, I'm Jill Malandrino.